Welcome to this installment of Clarifying Tax Situations with attorney and CPA David W. Crossing.
How are estimated tax payments between husband and wife allocated during a divorce? A problem commonly develops where a divorcing couple has historically been filing married filing joint returns, but intend to file married filing separate returns for the first time due to an impending divorce. The problem is this. Any estimated tax payments that are made for this year are ordinarily credited by the taxing authority to the first person listed on the previous year's married filing joint return. This person, the top Social Security number on the married filing joint return, is considered by the taxing authorities to be the taxpayer and the other their spouse. Issues can often arise where the wife is listed as the second Social Security number on the married filing joint return, but rather has earned a majority of the couple's income and paid in a majority of the withholding. Even if the parties agree in advance that there's going to be some other allocation of the estimated payments other than 100% to the taxpayer spouse, there ordinarily is no reliable way to inform the taxing authorities of the agreed upon allocation between the parties of the estimated tax payments, other than 100% to the taxpayer spouse. The situation is further exasperated or aggravated where the taxpayer spouse files his or her tax return early in the tax season and gets a refund of 100% of the couple's estimated tax payments before the non-taxpayer spouse files his or her married filing separate return. While the IRS in Publication 505, which concerns withholding and estimated tax, indicates that a couple can divide estimated tax payments, including applying refunds from prior year returns, in any way in which they so agree, the IRS will often ignore these calculations and simply allocate the entire overpayment to the taxpayer spouse without allocating any portion of the overpayment to the non-taxpayer spouse. I believe this is a matter of administrative convenience to the IRS. So here's the only solution that I've been able to come up with over the years. Expect the IRS to ignore your allocation. Okay? Treat the current year estimated tax payments, including any prior year overpayment or refund, as a marital asset and specifically allocate all of this to the taxpayer spouse because this is what the IRS is going to do with it anyways. The non-taxpayer spouse can be allocated a like amount of some other form of marital property in the marital property settlement agreement. That should take care of the problem.